All right, welcome to today's class. So yesterday we continued from where we stopped in on Wednesday. That's day two. Yes, day two. So we we were working on the notes to the financial statement yesterday. So we are going to continue from there tonight. So I will switch over to my Excel so we can continue. All right. I believe you can see my Excel, Microsoft Excel now. So yesterday we started, like I said, we started working on the notes to the financial statement. So after the extended TB, the next item of the financial statement you want to work on is the notes to the account. So from the notes to the account to the various financial statements. So we are done with item to the statement of profit or loss, which is our revenue, cost of sales, operating expenses. So we are about to do our statement of financial position. So the first item we usually have or we usually find in statement of financial position, if you have taken a financial statement before, is the non current asset, which is our PPE. So on the face of a financial statement of financial position precisely, you don't see the list of the assets like office equipment. I think I'm echoing. Please can you mute your mic, Damilola? All right, thank you. So on the face of a financial statement, like in the financial statement of financial position, you don't see the breakdown of the various assets like office equipment, furniture and fittings, motor vehicle. No. All of these assets are classified as one and they are called property, plants and equipment. So the only place you can see those breakdown is on the note to the financial statement. So on the face of the account, you won't see the breakdown. You only see it as property, plants and equipment. And the property, plant and equipment is a schedule on its own that has three major it has three major sides. It has the cost, the accumulated the depreciation or accumulated depreciation, and the net book value. Remember, we have been taught that we do not carry our no current assets or PPE. According to IAS 16 now, we don't carry our PPE at cost. It is being carried at the net book value, and the net book value is simply the cost minus the accumulated depreciation, right? So on this schedule, in the note to the account, you have those breakdown, the cost and the accumulated depreciation. Then what you'll be taking to your financial statement of financial position is the net book value, which is cost minus accumulated depreciation. So we are going to be having costs. So we have from our extended TB, we have two non-current assets here. We have the furniture and fittings and the office equipment. Please, if your mic is unmuted, please do well to help us to mute your mic. Thank you. So the first asset here is furniture and fittings. So I'm going to go over to and create an heading here, furniture and fittings. Furniture and fittings. So the next asset I have is office equipment. Office equipment. Then I have total. Who is unmuted? Um, Oluwatobi, your mic is unmuted. Please, can you mute your mic? Thank you. So next we'll have a column for total. Then so now let me bring this cost here. So cost is what the cost of purchasing that asset. We know what cost is made up of: the purchase price, the price of bringing the asset to the organization, and the rest. So that is the makeup of cost. So the cost of the furniture and fittings for that period that we are working on, which is 2024, we'll bring it here. So we can bring it from the statement of from the extended TB, which is this 150,000 for furniture and fittings, and 350 from for office equipment. So I'm going to sum this up. So this is what we call the PPE schedule. So the next item we normally have, there are very different things that can come. You have addition, you have revaluation, you have disposal under cost. Then cost is a category on its own. So we have cost at the beginning, we have addition, we have revaluation if there's any, we have disposal. So this is a segment. The next segment is our accumulated depreciation. Accumulated depreciation. So for the accumulated depreciation, we are still going to have all of these categories: addition, disposal, and the rest, if we have any of them. But this is what actually makes up. Then we have depreciation for the year. Depreciation for the year. So there are more to this table, right? There are more to this table, but these are the major ones. So what this is saying is, if there's addition, let's assume this is not the first year of the company. If in 2020, in this year, maybe they've been in business in 2020 since 2023, and in 2024 they purchase an asset, a new asset that falls under furniture and fittings class. That cost of that new asset that was purchased during the year will come under addition. Then if the value is revalued, remember, according to IAS 16, an organization is meant to revalue its assets annually and also test for impairment annually. So if there's any revaluation, surplus or whatever, it will come under this, under revaluation, depending on the class of asset now. Then if there's any disposal of any asset, any of the company's asset, the cost of that as asset that was disposed, let's assume the cost at the beginning, total cost for furniture and fitting is 150,000, and out of that 150,000 during the year, 50,000 naira worth of furniture and fitting was sold. So it is that 50,000 that will now put here as the cost of the asset that was sold, which means our cost is going to reduce. And when we are doing disposal will be in negative, because we are saying it has left the book of the company. That's what it means. So anything disposal is always in negative. Addition is positive. We are adding to the company's assets. Disposal is negative. Revaluation surplus is positive. So I believe we got that. So the next segment is our net book value, which is also our carrying amount. This is the amount that we are going to, that the property PPE will be shown in the financial statement, the statement of financial position. So at the end of the day, our net book value is simply our cost, our total cost minus our total accumulated depreciation. That will give us our net book value. So we'll have a total here and here. So we are going to populate this table soon, but for now, let's leave it as this because we are going to bring in our depreciation charge for the year. So for now, let's leave it at this. We will come back to this aspect again. So at the end of the day, this this the figure in this column is what we'll take to our statement of financial position. So we'll come back to this schedule again. Let's just go to the next item we have on our statement of financial position, which is bank balance. Our bank balance. So you can decide to create a note for this, you can decide not to. Then the next, but let's just create a note for it. um 6, we have cash, call it cash and cash equivalent. So we can have cash at bank, cash at hand. So that's why we'll name it cash and cash equivalent, but under it we only have bank balance. So our bank balance is our bank balance is so I'm picking the figure from my extended TB2 under statement of financial position column. So the next item we have here is loan. We have loan. So that will be our note 7. So we'll classify this as non-current assets, not current liabilities, sorry. And under it we have loan. So when we say non-current liability, that's liability that can of which its duration is more than a year. So we assume that this loan is more than a year. So if it is within a year, like bank overdraft, it will be under current liability. Please take note. So this one loan. So the next note we are going to create now is I think for share capital. For our share capital, or rather I'll title this equity, and we have underneath it we have share capital. So I'm also going to pick the figure for the share capital. All right, so I think that's all we have for the statement of financial position. So we are done with the notes to the account. We are done with the notes to the account. So the next thing we are going to do now is we are going to prepare the three major statements, which is the statement of profit or loss, statement of financial position, and the statement of cash flow. So each of them depends on each other. So if the order in which you create them is the statement of profit or loss first, before the statement of financial position, then next the statement of cash flow. So I'm going to start with the statement of profit or loss, which I the short form of it is SOPL, statement of profit or loss. So I'm going to bring in the company's name, SYZ Limited. We have the company's name. We have statements of profit or loss for the year ended 31st December 2024, right? So this is the heading that we are going to be using. So you can put a line just to make your work look presentable. Then I think I should align this with the okay, it's in 12. So the next thing we want to do is bring in our Naira sign. So you need to show the currency in which you are working with. Then the first item on our statement of profit or loss is our revenue. Our revenue. So I'm just now that I've written my revenue, I'm just going to go over to the note to my account and pick the figure for revenue. Using the same method I've been using to pick figures, I'll type in equal to, go to the note to the account and pick the figure. So the next item is the cost of sales. So you might not necessarily need to do less this in the face of the account. Just put cost of sales, but you know you are going to reduce it because you are the format for statement of profit or loss is your revenue less cost of sales, you get your gross profit, and you less your administrative expenses and selling and distribution expenses, you get your net profit. So that's the same thing we are going to do. So if I'm going to pick the figure for cost of sales, I'm going to put a minus sign. So equal to minus and get the figure from the note to the account. Take note to the account. So we have this. Uh, this should be in negative. I think there's something wrong. Mm, it's supposed to be in brackets. I think there's something wrong here. So we'll just use it like this. Let me remove the euro sign. It ought to be in negative in brackets. So some Excel we put when you click on this sign of this command sign, it stands for accounting mode of numbering. It will put it in brackets. So but we are not having that now, so we'll just work with what we have. So I'm going to do sum it up, so it will give me my gross profit. So the next item I want to bring in is my operating expenses. Operating expenses. So let's put in this gross profit because this is there's a summation here, and we'll put in a line, top and bottom line, to indicate that there was a summation or a calculation done there. Okay, so just a top line, a top border. So the next is our operating expenses, which we are going to pick from this end, from the note to the account still. Sorry, I'm meant to put minus, so it will make bring it as negative figure, because remember we are lessing our operating expenses from the gross profits. So what we have now is our net profit or loss. So from the, if you check, the gross profit is way lower than the operating expenses. So that means we are going to be arriving at a net loss. We are going to be arriving at a net loss. So I'm going to sum this up. So we are arriving at a net loss of 1.1 million 006. So there's something I will need you to take note now. So for you, how do you know that your calculation is correct, your statement of profit or loss is correct? Now if you check this 1,006,249 naira, this is the same figure that we have as our the deficit between the statement of profit or loss and statement of financial position. So what does this mean? For you to know that your statement of profit or loss, whatever you have, whether it's profit or loss, is correct, it has to give you the same figure you are having here under both column. It has to give you the same figure. So if it's not the same thing, it means your posting is wrong. Then you have to start checking back to know where probably you did not capture any, you did not capture a figure in the extended TB. So that's the major cause of it. So you have to go back and check from the notes to your account, start taking it one after the other, checking them one after the other to be sure that you have captured every item that you need to capture. Hence, your statement of profit or loss is not correct if it's not the same figure. So I believe we got that. So this is how to this is the statement of profit or loss. This is not complicated. So another thing you want to bring in here is the note number. So some, remember we just did the summary. This is what this is actually IFRS standard. You don't bring in what make up revenue on the face of the financial statement. You only bring that, you see, find that in the notes to the financial statement. So we want to link the note number here so that anybody that is users of financial statement, they will be able to, okay, how did you arrive at your revenue? What make up your revenue? So when they go to the notes of your account, they will be able to see the breakdown, what makes up the revenue. So we are going to link the notes number here. What we are simply telling them is that revenue is on note 1, cost of sales is on note 2, operating expenses breakdown or whatever you need to know about it is under note 3, like that. So you want to bring the note number to aid your users, the users of the financial statement, to be able to understand what you have done. So this is the way we prepare the statement of profit or loss. So the next item you want to prepare is your statement of financial position, which is SOFP, your SOFP. So I'm going to bring in the company's details here and tag this statement of financial position. Statement of financial position. So statement of financial position is not for the year ended, it is at as at 31st December. So take note, as at, so you are telling, you are stating the company's financial position as at a particular date and not for the period. But statement of profit or loss is transaction, everything that happened within a period of time. So that's why we use for the for the year ended, or for the period ended. So it carries everything that happens in a particular period. Why statement of financial position is at a, as at a particular date. So that's the difference. So the format is, you also have to bring in your naira sign, show the currency that you are working with. Then we have our non-current assets. Our non-current assets. So under the non-current assets, what we'll be having here is property, plant and equipment. So you don't bring in all the various non-current assets like I mentioned earlier. It is classified under property, plants and equipment. So then we'll go over to our property, plant and equipment notes, which is note 4. Sorry, this is supposed to be note 4. And pick the figure under net book value, not the cost, net book value, because PPE is to be reported at net book value and not the cost. I know you might be saying this is the same figure, this is the cost and is the same thing. We are still going to come to this, but let's just work with this now. So the next item we want to have here is our current assets. So we can sum this up because this is the only no current assets we have. So you can also have investment in shares. All of these are no current assets. Yes, if it's more than a year, it is non-current assets. So we have our current assets. Current assets. So the current assets we have here is bank balance, or can call it our cash and cash equivalents. Cash and cash equivalents. Our cash and cash equivalents. So we are going to pick it from our notes to the financial statement. So the next item we'll be having now is our non. Yes, we are. The next thing to do is sum this up. We'll sum this up. Then we have our total assets. What make up our total assets? The non-current plus the um current assets. So we are summing the totals up, which is this plus this. So the next item we'll be having is the formula of the accounting. Remember the accounting equation that your asset must be equal to your equity plus liabilities. So that's the same thing that's applicable. So these are total assets. So our total equity plus liability must give us this. It must give us this. So we can now put the closing accounting sign here to show that we are done with total assets side. So the next thing we want to have here is our equity and liabilities. So starting with our equity, we have the share capital. So we have a note for it. We have a note for the share capital, which is note 7. Then the next item that's also form part of our equity is retained earnings. Retained earnings. This is another thing that also form another item that forms part of our equity, retained earnings. So retained earnings, since this is the first year of the company, our retained earnings is simply our total is simply our net loss for the year. So this is the reason why I said the first statement you are to prepare first before the first statement you are to prepare first is your statement of profit or loss. This is because of your retained earning. You need whatever you got here as your closing, whether net profit or net loss. This will form part of this is your retained earning. This is your retained earning for the period. So I'm going to pick my retained earning, which is my net loss. Is net loss. I think being it's profit, we'll bring it there as profit. So regardless of what it is. So these are the two items we have under equity. So these are equity, 6,000. So the next thing we want to do is okay, top and tick. So the next thing we want to do is our non-current liabilities. No current liability excuse me, no current liabilities. So the item we have here is loan. So we are going to pick that figure from the notes to the account, notes to the financial statement, which is this, So at the end of the day, we'll now have what we call our total equity and liability. Our total equity and liabilities will be total equity plus the liability. So this is it. Let's close this up. Then we'll have to check, does this tally with what I have as my total assets? Remember your statement of financial position, your as total assets equal to your equity plus liability. So this is my total assets, 993,750, 993. So this is how you know that your statement of financial position has agreed or is balanced. So with this, we are done with our statement of financial position. I trust we got that. We are done with our statement of financial position. So we'll be moving over to the last statement, which is our statement of cash flow or our cash flow statement. So I call it SCF, statement of cash flow. So we'll bring in the name as well, XYZ. I'm going to change this to statement of cash flow. Statement of cash flow. So it's for the year ended. For the year ended, not as at. For the year ended. So all of these are very important. All right. So we'll have our Naira sign still. So we are going to remember we have two methods um of presenting our statement of cash flow. We have the direct method and the indirect method. So we are going to be using the indirect method. The indirect method is your operating your profit before interest and tax. Let's add your depreciation. Let's non cash item. Add your not cash item. Then you do your changes in working capitals, right? To get your operating activities. Then you have your investing activities and your financing activities. So these are what we are going to be doing here, starting with our operating activities. So our statement of financial or our cash flow has three segments: operating activities. So we are starting with our profits. Now we what we had is net loss, loss before interest. So we have 15 minutes more. In the next 5 minutes, I should be rounding up so we can take questions. Loss before tax. So our loss before tax is simply the loss we have. So we are picking the loss before tax from our statement of profit or loss, which is this figure, our net loss. Then the next thing we want to do is to add depreciation, but we don't have depreciation yet. We are still going to come back and do and calculate our depreciation. So depreciation is zero for now. We change the next thing you have is changes in working capital, but we don't have changes in working capital, but we don't have any working capital yet. So our working capital is our trade payables, trade debtors, and trade payables, trade receivables, and inventory, but we don't have any of that. So we just have our net operating activity, net operating activity. Since we don't have any of that, which is the summation of everything here, starting from the no loss before tax. So these are net operating activity. I'm going to put a top and a bottom border. So the next aspect or this next segment is our investing activity. Investing activities. So you need to know this format of the statement of cash flow. So what items do we find here? So investing activities contains um when a company invest in either in any assets that will last more than 1 year, that will last more than 1 year. If it's just for 1 year period, it will fall under working capital, changes in working capital, which is the operating activities. But when it is more than a year, it falls under the investing activities. And also when there is a purchase of PPE, plants and machineries, property, plants and machineries, it also falls here. So the only activities we have here is purchase of plants and machinery, of PPE, let me shorten it that way. So since we are purchasing, it means that money is leaving the company, right? So we are bringing that figure and bringing it as negative, because to show that money is leaving the company, because this is cash flow. Statement of profit or loss, statement of financial position, they are prepared in accrual basis, but statement of cash flow is on cash basis. So we are bringing in what actually occurred in cash. That's why we are adding back every no cash items like depreciation and the likes. And if there is any changes in working capitals, we also do the adjustment. So purchase of PPE. So we had the company purchased some PPE. This you can pick from your notes. Your notes. Note 4, which is the note of PPE. So where do you pick the figure from? The addition. So this is a new company. We assume this is a new company, so they don't have any asset before. So we are picking this. So the next item, we don't have any item here again. So this is the only item. This will be our net investing activities. Net investing activities. So the next category is, or the last category is our financing activities. Financing activities. Our financing activities. So what we have here is every item that the company use in acquiring fund for the company. So share capital is one of it. Loan borrowed is one of it. Debenture, bank overdraft, all of these funds the financing activities. What's the fund that is being used to what? To finance the business. The fund they come under the financing activities. So we have our share capital. Our share capital come here. So this we are going to pick from our statement of financial position. So to do this, normally when you are doing your, you want to know if there's an increase or decrease in all of these things. So for our share capital, because we don't have, the company does not have a previous year, it is assumed that is an increase, so it will be an addition, right? Money is coming in, so it's an addition. We are going to pick it and it's going to be added. So the next financing activity is the loan we borrowed, and is also an addition. Is also an addition. This is okay, this is it. So at the end of the day, we have financing activities to be 2 million, which is our net financing activity. Net financing activities. So the next thing we want to do is cash and cash at the beginning. Cash and cash at the beginning. So this is a format already. This is a format already. Is a format already. I'm not the one that formulates it. So if you are familiar with financial statements, you should know this at the beginning. So it's a format. So our cash and cash at the beginning is 0. We don't have any cash and cash. Then we have cash and cash at the movements during the year. So the movement during the year is simply um our net operating activities plus our net investing activities plus our net financing activities. So at the end of the day, we are to add our cash at the beginning plus our movement during the year together to get our cash at the end. Our cash at the end. So I'll just copy this to save time. We are short of time already. And change this to end. So now how do you know that your your cash flow statement is correct? Your cash and cash at the end must be the closing balance of your cash of your bank statement as at that particular date you are working with, and it must also tally with the what you have as your cash and cash equivalent in the statement of financial position. So we have 493,750 and we have 493,750. So this shows that our statement of cash flow is correct. So that's we have just 13 minutes more, less than 6 minutes more. So I would like to take questions now. If you have any question, we have come to the end of today's session. We are done with the preparation of the three major financial statements, and I believe we understood what have been done thus far. So if you have any question, it is time for us to ask. If you have any question, anything that you are not cleared about, we still have 6 more minutes to go. So you can unmute your mic and speak, or you can type on the chat box. Any question? Does anyone have any question? Okay, so I think we all got the message. All right. In the absence of no question, so this is where we are going to end today's class. Tomorrow we are going to learn how to pass journal. So we are working with incomplete record. Most of the transactions or most transactions are not posted. There's no double entry basis. So we are going to be seeing how we can pass journal, bringing in our debtors, petty cash expenses, our trade payable, depreciation, and if we have any accruals or prepayments, how do we bring it into the financial statement? So by tomorrow we'll be discussing that. For now, this is where we are going to end our training for today. And in the absence of no question, do have a lovely night rest.
Thank you.